Hi, I'm Perez Goree, certified public accountant. I've been practicing accounting for over 30 years. I'm also a certified tax coach with a specialty niche market of specializing in tax strategies. We spend a lot of time working with our clients, looking for strategies to save them significant dollars. And we spend a lot of time in research and development and just studying strategies and always looking for the best way to save our clients money and bring more value to them. I'm also a licensed registered rep with a Series 6 and life insurance license. I've been advising clients for over 12 years in the retirement plan and life insurance spaces. And today we're going to go over 12 year-end tax strategies. We are somewhere in the middle of December. We're getting close to year end, and we want to make sure that everyone is considering last minute things they may want to consider doing and look for ways to save significant dollars right towards the end of the year. So we want to go over 12 different strategies. One of the first things you want to do is you want to maximize all of your deductions. We're not talking about creating new expenses. We're talking about converting personal expenses to pre-tax business expenses. These are things that you're already spending money on, and we want to make sure, or we want to look for strategic ways to convert those spendings to your business. Like, are you taking advantage of your home office deduction? Are there certain types of travel that you're doing throughout the year? Maybe you're on a vacation with the family. Is there a way we can convert that to business purposes and deduct those expenses through your business? We'll look at business gifts, and there are just many, many other strategies or spending that you may be doing personally that if you can make a shift or change a couple of ways you do those things, you may be able to take those deductions through your business. Number two is you want to consider prepaying your expenses. This is generally if you're using the cash basis of accounting where you record your expenses as you pay them rather than the accrual basis where you record your expenses when you receive the bills. You can actually pay up to 12 months of expenses for next year. So given that we're in December, if you know what your, say, your rent expenses, or if you're leasing equipment, if you know what those monthly charges are, you may be able to deduct up to 12 months in December by paying those bills in December for next year. That's what we mean by prepaying those expenses. Of course, this also is driven by the cash flow. If you have the cash flow to take advantage of these things, and it doesn't have to be 12 months. If you could only afford to pay one extra month in December for next year, well, that also qualifies. Just something to consider. And this also, the next one, number three, is delayed billing. This is also a function of your cash flow. Can you afford to wait to receive payments from your customers? And if you can, well, you can stop billing your customers until after December, until January. And again, this assumes that you're on a cash basis of accounting where you record your revenue as the cash comes in the door, not when you issue the invoices. Number four is if you're S corporation, there's things that you want to consider and make sure that these things are happening before the end of the year, particularly if you haven't taken any salaries this year. And we're in December now. We want to make sure that you're taking a reasonable W-2 salary. That when I say W-2, I mean you actually have to generate a W-2 at year end, not that you're just transferring money from your business to your personal account and you're calling that salary. That's not really a salary if it's not associated with payroll taxes. That's just an owner draw or shareholder distribution. So you want to make sure that you're paying your self-employment taxes on those payments, and you actually are receiving a W-2 at year end. And you want to ensure that if the business is paying for health insurance for you as the business owner, that you're also including those health insurance benefits as part of your W-2. That's actually part of your wages. You count that as your W-2 taxable wages, and then you deduct it on the personal side of your tax return. And you want to finalize an accountable plan if you don't have one. An accountable plan is just a fancy name for a reimbursement plan where you can draw up a contract between yourself and your business that the business will reimburse you for any out-of-pocket expenses, like your home office, if you're using your personal vehicle in the business can reimburse you for those expenses. That makes those expenses a tax deduction for the business, but they're not counted as taxable income to you personally because you're just being reimbursed for monies that you paid on behalf of the business. Number five is some other items you want to consider is you want to start to collect your 1099 data for vendors that you paid $600 or more to throughout the year. And if you haven't done so, you want to get their W-9 information. The W-9 captures either their tax ID number of their business or their social security number, depending on how they're operating. And you want to start that process now because there could be penalties to you if you're not issuing 1099s to clients and the IRS starts to learn that you're paying contractors and other people providing service for your business and you're not issuing them a 1099. Some other things you want to look at is you want to make sure that you're completing your bookkeeping. You're not waiting till the last minute to do your books. Um, that's one of the big reasons that we see why clients or people in general procrastinate on filing their taxes because they're not current with their bookkeeping. And you want to start collecting documents for the upcoming tax season. Tax season is not really going to start probably until January 15th, January 19th, somewhere in that period of time. So if you can get a jump start on gathering those documents, you'll be way ahead um, when the actual tax season starts. Number six, again, we're talking about year-end tax strategies. You may want to think about buying depreciable assets, things like vehicles, furniture, equipment. These things all can benefit you by receiving bonus depreciation. But again, this is only if you're going to buy these things anyway. We're not saying generate new expenses. Like, for example, if you're in a 25% tax bracket, we wouldn't advise you to spend $1 so you could save 25 cents. So again, because you lose not on 75 cents. We're saying if you are already going to make these expenditures anyway, maybe year end is a good time for doing so, but not just out here willy-nilly spending money just to get a tax deduction. That's what we call the tail wagging the dog, and that's not what you want to do. Number seven, you want to think about harvesting capital losses. Well, what does that mean? Harvesting capital losses is effective if you know that you have capital gains on selling assets. Maybe you sold some stock, maybe you sold some real estate or some other type of assets, and you have a capital gain on those assets. Well, are there other assets that may be upside down and you're losing money on those investments and you might want to consider selling some of those? Maybe you have some stock that's losing money, something to that effect. You could consider selling those stocks, if you will, that's losing money, and you can offset that against your capital gains. Um, and you may end up having a tax-free capital gain if you have enough um, capital losses to offset those gains. That's what we call tax-free gains. Another thing you want to look at, number eight, is net operating losses. We call those NOLs. NOLs are just what they are. It's your revenue minus your expenses in your business. So if your business is losing money, you can carry that loss forward into future years. I believe it's up to prior to 2021, you were able to carry those losses back 2 years and amend your prior 2 years returns, then come forward um, with those losses. But after the 2021 tax changes, that stopped. You can only come forward with the losses, and you can only take 80% of this current year's loss into future years. So what does that really mean? So for example, if you had $100,000 loss in your business this year and you couldn't use all of that to offset your income, you would be able to carry forward 80% of that $100,000 or $80,000 into next year's tax return. So if next year you had $100,000 profit in your business, you could use last year's $80,000 loss to net against your $100,000 loss for the next year, and you're only paying tax on $20,000. So again, that's another function of your bookkeeping. The sooner that you can do your bookkeeping, the sooner you know what your losses are, the sooner you know what your net operating losses are. You shouldn't wait till next spring when it's time to file your tax returns to know what your losses are. Those should already be known by now or close to it. Number 9, you want to consider putting your personal vehicle in your business. So like if you or your spouse, if you drive a personal SUV, a crossover vehicle, a pickup truck, and they all, or any of those have a gross weight of 6,000 pounds or more, if you place those vehicles in the business before the end of the year, you may be able to take advantage of some bonus depreciation. So that's one that a lot of clients sometimes miss out on. And you want to, number 10, you want to put your child on payroll. Um, this is if your child is under 18 years old and you own the business. You might want to consider paying your child a reasonable wage through your business for legitimate work. They have to really be doing some legitimate work. And it's good if you have documented job descriptions, job duties for what they're doing. And if it's your business and say you have a sole proprietorship or um, a partnership between you and your wife, your child can be as young as 7 years old. And I mean, they may be able to file paper, shred paper, things of that nature. There are things that they can do. Are there things that you are spending money on behalf of your child that you may be able to strategically convert to paying a salary to your child, then using those funds to buy whatever it is you were going to buy? That goes back to one of our earlier items. I believe it was number 1, where we talked about converting um, money that you're already going to spend into pre-taxed business expenses. And this is one of those things you might want to consider doing. And number 11 is charitable contributions. Charitable contributions reduce your AGI, which is your adjusted gross income, assuming that you make these payments by December 31st. We work with our clients throughout the year to monitor their W-2 income, the profits from their business, so we can tell them at any moment in time, if you had to file your tax return today, let's say if this was June 30th, if you had to file your return on June 30th, we can tell you what your tax liability would be at that time and recommend multiple strategies to reduce those taxes. But now here we are at the end of the year, and we're doing that same thing. We wash, rinse, and repeat. We're looking at our clients' taxes on a monthly basis. And now that we're coming to the end of the year, and we may see that the clients have a profit generated for their business and they have a tax liability, we may look at making some charitable contributions uh, to lower their taxes. You can lower it by up to 50% of your adjusted gross income or 30% of your adjusted gross income, depending on what types of organizations you're donating the funds to. Oh, also, if you're driving to charitable organizations where you're volunteering your time, the miles that you drive, um, say to pick up, say if you're in a Big Brother, Big Sister program, you're going to pick someone up, take them to a ball game or something like that, those miles are deductible. Also, if you're volunteering in your local churches, so if you're usher, deacon, or you're just serving in any sort of voluntary capacity in your ministries, and you're not being compensated for that, you could look at deducting your miles up to 14 cents a mile for each trip you make when you go to church. So that's one of the deductions we see a lot of people miss out on for charitable contributions. And lastly, you may want to consider establishing a retirement plan. you know, a retirement plan through your business. This allows you to take advantage of the employer, that's your business, as well as the employee contributions to the plan. Like, for example, if you set up a 401k plan or something to that effect, and you personally contribute into the 401k plan out of your paycheck, Well, you could also have a company match where the company can match a certain percentage of what you contribute. The company matches is a tax deduction for the business, and it's also increasing your personal retirement account. So that's something you want to consider. And you also may qualify for tax credits for setting up these types of plans. And you want to check with your financial advisor for the deadline for setting these types of plans up. Certain types of plans have a cutoff date. If you haven't set it up by a certain period of time, you may have to wait till next year. So you want to reach out to your financial planners to find out what those timelines are, meaning when do I need to set the account up and at what point do I need to have funding account? When do I need to deposit the funds into the account? And for more tax planning concepts, tips, and ideas, there's several ways that you can reach out to us. You can schedule an appointment for your customized tax plan. We do those all the time for clients. You can enroll in one of our upcoming online tax courses for business owners. Those courses will be coming out in January. And you could also acquire one of our ebooks, or you can download one of our white papers for more detailed information about the concepts that we're talking about. And we want to thank you for watching our videos. You can subscribe to our YouTube channel and any of our other social media platforms. We thank you and have a great day.